mortgage solutions for the self-employed, yes, and could interest rates be coming down next week? All this and more with a good friend and mortgage broker, Mr. Dion Beg. Here we are, my friends, back with our favorite mortgage broker in all of the land, Mr. Dion Beg. How you doing, my man?
Hey Gary, I'm great, man. How's things?
Excellent. I should say the Dion Beg because that's your Instagram handle, right?
Yeah, I don't know why it is, but that's what it is.
I like it. I like it. I like it. Things are good. We're, in the middle of July and we're starting to see the city of Toronto, and I know other cities across our great nation just a little bit more easier to get around because everyone's on vacation, right?
Yeah, that. And I also know like Canadians love summer, meaning,
Yeah.
it's only around for a certain period of time. And what I noticed having moved to Canada from Australia is that Canadians just love that window of time where they can walk around outside, and it's always a good energy in summertime.
Yeah. When you can walk outside in a t-shirt. I know a lot of people take it for granted. However,
Yes.
us Canadians, we're
Oh
pretty
yeah,
happy.
yeah,
We're pretty
yeah.
happy. And a big shout out. I mean, you know me, I'm a big football or soccer fan. The Canadian men's national team did something pretty special over the last couple of weeks. And now we get to be all excited. I'm a huge sucker for the Olympics. So I'm going to be tuned right into the Olympics and everything.
Okay, guilty. I don't even know what you're talking about, but I believe
Yeah.
you.
Yeah. Thank you. I appreciate the support. Good
But no,
stuff.
no,
Good.
I know there was a big event. So what? Spain beat England, but Canada did pretty well in the overall standing.
They ended up in fourth
Four.
yeah, yeah, which is pretty awesome. Two different
That's
tournaments, but yeah, pretty awesome.
still
They went up against Argentina, the powerhouse.
wow.
But
That's pretty
yeah,
damn good. Okay,
it
very
is
cool. Very cool.
amazing. It amazing. New coach, new. I don't know. It's just a whole new fun of Canadian men's soccer, and the women are always phenomenal. So we're
All right.
defending gold medal champions in the Olympics. So we'll see what we can do on the
Maybe
women's
you and me
side.
should head down to BMO field before you head off to the West Coast.
I like it. I like it. That's a plan. That's a plan. Okay, so what's going on in our real estate industry? And of course, this when we have Dion on the line here, it's always mortgage focus in a sense, and how do we buy properties? And if you've been following along for the last couple of years, or even the last 10 years. One of the questions that I always ask our buyers, actually, I asked three questions if you've not heard of them before. How are you going to buy the property? How can you add value, and how can you sell it? Well, how are you going to
Mm.
buy it is obviously that's ever changing, isn't it, Dion? And you messaged me offline and said, hey, there's a couple of products out there that
Mm.
perhaps people aren't aware of, and we should probably talk about that, especially in these types of times where buying a property can get a little bit more. Perhaps we have some more obstacles to overcome. So talk to us about the net worth on how we can use our net worth to purchase
Yes.
properties.
Perfect. So, yeah, guys, just in the last couple of weeks, we've used these products, and I thought, you know what? I don't think these products are really widely known out there, so I thought I'd take the opportunity to share it with you. So, there is a product with some major Canadian banks called the Net Worth product. Okay, more specifically, liquid net worth. And what this does, guys, is it allows you to use money that you have in a bank account or in a stock trading account to help you qualify for a mortgage that you might be trying to get. Okay, so let me give you a real life example. Let's say you're buying a property for $1 million, and let's say your income on paper allows you to qualify for 500,000, but you need 800,000. So you're short $300,000. Okay, now, if you happen to have that $300,000 in a savings account, a TFSA, a stock trading account, or mutual funds, or managed by maybe your financial planner, and we can prove that you have this $300,000 and you have had it for a period of time, usually three or more months, then we can actually go to the lender and say, hey, look, my client needs an $800,000 mortgage. Their income qualifies for 500, and they have this additional $300,000 sitting in an account over here. So with these things combined, we can actually get you qualified for that 800 grand with the fact that you've got that liquid net worth. Now, a couple of questions that come up, Gary. always are, can we use RRSPs, registered funds? Okay. The answer is yes, you can, but the lenders will take off 30% off the top of that RRSP number because they know that if you were to take that into your possession, you're going to pay some tax on it. So, put simply, let's say, and we had recently a client who had $400,000 in RRSP. After the 30% was taken off, and the 70% that he was able to use was $280,000. And that $280,000 was able to be used under that net worth program in order for him to be able to borrow more than he would have qualified based on his income. So it's quite a useful tool for those of you who have been squirreling away money in other areas like your RSPs, like your TFSA savings accounts, or whatever it may be. It's a very important question to ask. And in fact, when we asked this question to clients, they said, "Oh, we've been dealing with a bank or somebody else, and they never asked us that question." And because that question wasn't asked, they didn't qualify for the product that we ultimately were able to get them at a major bank at best rates. So it's a very useful product for those of you who have been saving for years.
I like it. You got to be able to. Sometimes we don't know what questions to ask. So I often find, Dion, too, especially when talking with other industry leaders like yourself, what questions should I be asking? It's a great question to ask if you're unsure what your next question is. Well, that's really cool. And then for a lot of us that are business owners, Dion, there's some other unique products, and one specifically came up for you the other day. And as business owners, it is a little bit more difficult, or our selection or opportunity for lenders obviously is a little bit smaller, or a lot smaller in some cases.
Correct.
But there's some really great products out there. So talk to us about that perspective. We're business owners.
Yeah. So if you're a self-employed person and you have a corporation, as many people know, self-employed people, and again, I'll use some numbers just to reference. Let's say you make $500,000 in a year in your business, and you pay yourself just $100,000. Okay, and you've got some expenses to pay and other things. But let's say that you still have an additional $200,000 that you've made in your business that you could pay yourself. But if you did that, you would end up paying 50% tax on that. So your $200,000 turns into $100,000. So what most people who have a corporation do, they'll take, let's say, the $100,000 that they actually need to live on, and the other $200,000, which we call retained earnings, they can keep inside their business. Okay, and it just sits in their business bank account and it's not moved out of their company. Okay, so that's called retained earnings. Now, when I go to a bank to qualify that client, I can, of course, use the $100,000 that they paid themselves. But what many people don't know is we can actually use the company's retained earnings as income, as if it was paid to ourselves. Okay, and it depends on the lender, but we're able to use anywhere from 40 up to 100% of those retained earnings, meaning that even though this business owner only paid themselves $100,000, because of his retained earnings, we could actually potentially use $200,000 or even $300,000 as income, which means instead of buying or getting a mortgage for $500,000, it might be $1 million or $1.5 million. And it's a tremendous difference, right, for those business owners. And again, I'm raising this because we've come across clients who, again, were put into secondary alternative lender B products, which are totally fine products, but they just weren't aware that, because we could demonstrate retained earnings, that we could then actually move them over to a major bank. So just to clarify, you need to have at least a 2-year average on those retained earnings for self-employed people. So if you had a bad year last year and a good year this year, just know they're going to take the average of the 2 years.
That's a good point. And this is something that is, we always assume, okay, I have this cash left in my corporation or my business account. I'm going to go out, buy a property, or I'm looking to invest those funds or what have you. I need to withdraw that money. And then the moment you do that, next tax season, you're going to be paying taxes on that. And I think that's just people's mentality or kind of what we've been trained to think. However, a lot of great business owners, they start asking those right questions, as we just previously talked about. And there's always, there's never, neither Dion or I are tax advisors or anything. Talk to your accountant. However, there are some really significant ways to lessen the tax that you could possibly pay, especially when you're buying property within corporations or a holdco. You could lend from one
Correct.
to another, interest free, things like that. So talk to your tax accountant, and definitely talk to people that are doing it at a high level to educate yourself, because there are some great ways to mitigate the amount of tax you pay.
Yeah, correct. And with those conversations, Gary, just recently I've been on Zoom calls with my client and their accountant. And so we'll actually all together sort of explore the options, and then the accountant will sort of advise the client, okay, in this situation you should buy in a holdco, or in this situation you should buy in personal name. And then we'll work out, the best solution, best outcome based on the situation. So yeah, they're part of the job, which when I first got into mortgage brokering was like, oh, let me just get people mortgages. But it's so much more than that. It's tax planning, income planning, and a little bit of estate planning thrown in there too. Sometimes we get on calls with lawyers and figure out, okay, how does this purchase impact my children in 10 or 20 years from now? So yeah, those are the more complex, but also really more interesting components of my day. It's kind of fun
Yeah.
sometimes.
No, that's good. That's good. We often think I'm going to go out and buy a property, and for the most people, the majority of people, we buy and sell property maybe 3 to 6 times in our lifetime, and we might have along that way, 3 to 6 different types of mortgages or what have you. But there are some really great mortgage products, as we've been talking about over the last, few number of years, and you really want to educate yourself. Okay, let's talk about what's going on today in the market, both from the mortgage
Sure.
perspective and real estate perspective. And you sent me a couple of images, or graphs, I should say, and some articles. Well, one of the things I thought we start off with, Dion, before we get into
Yeah.
that, is, let me flip over the slide there. Yeah, okay. And I am going to go to here, share my screen. I just did a Google search, and we talked about this really briefly, Canadian real estate market. So if you search that, and we're going to talk about what's obviously going on in the market and the trend, obviously, from, as we're seeing here, and you're probably feeling it a little bit, if your home's for sale, is there's a lot of inventory. There's a lot of homes for sale. Prices are falling somewhat, a lot in areas and not so much in some other areas. But this is also interesting. And I don't know if people, especially if you're a business owner or if you're a colleague, people, when you search Canadian real estate market, Google will tell you what the majority or what is trending when people are asking right here. People also ask, are housing prices in Canada dropping? What's next on the 5-year forecast of Canadian real estate? What is the housing forecast in 2024? These are all questions that Dion and I like to answer in our videos, and especially when we're having our one-on-ones. This is all really, really interesting. So this is this is also a little peek into what people's browser history could be, right, Dion? And
Yeah.
this is what
Yeah, yeah.
Dion and
So I mean, yeah, I think if you're interested in the real estate market, especially if you're a buyer, these are very realistic or common questions to ask. Is now the right time to buy? Are prices dropping? Are interest rates going to drop? Right. So it seems that a bunch of people are searching on those, as you would expect right now.
Exactly. And I can do the exact same thing in Toronto or Vancouver or Winnipeg or Calgary, wherever you happen to be tuning in. And people are always asking the exact same thing. It's just a little bit more focused to that area. And so what is going on? Well, you sent me an article from Reuters here. And
Yep.
Dion, and it's not much, but it's kind of like this is the trend that people are seeing, right? Talk to us
Yeah,
about
so I
what
mean,
we're seeing
the
here.
headlines of last week were that we've had the worst June in over a decade in terms of the volume of transactions of sales, right? And that is true. Now, simultaneously true is the fact that the month of June saw an increase in home sales over the month of May by 3.7%. And so, yes, guys, what does this sort of ultimately mean? It means that we are in a depressed market, but it's improving month over month by over 3.7%. So it means that these types of things aren't going to happen overnight. Like a quarter point drop isn't going to mean that we're going to have 50% more sales month over month, right? And we have to acknowledge that we're still in a market where the Bank of Canada did a great job of kicking us while we were already down by increasing interest rates for so long and holding them up there for so long. And as rates drop, people say this: rates go up in an elevator, but they take the stairs to come down, right? So this is what's happening in terms of rates. The hope is that maybe in July, it's actually in about a week from now, we have our next announcement, a little over a week, and the hope is that we'll take one more step down, which may then bump this number a bit too.
Yeah, yeah. And the interesting thing here is when you're reading articles like this, and I just want to point this out, is the average selling price on the home index price, mind you, was down 1.6%. Now, the key word here is national average, or the two keywords. We don't buy national real estate. We've talked about this many times before. We buy, a townhouse in Stouffville, a condo in downtown Toronto, or a detached home in Newmarket, a very specific market. So when we see articles like this, ask your realtor, ask me, ask Dion, what's going on in the area where I'm buying, so you can kind of get the true essence of that. But that's the narrative of what's happening in the Canadian real estate market. So there you have it. Okay, next up, let's flip over to here, Dion, and here we go. The gap between employment and population widening. Why does this affect interest rates and the economy? Talk to us about this.
Yeah, guys. So Gary and I have spoken at length on many podcasts about the increase in population and how it has impacted housing, in that, when you let so many people into a country, but you don't have a plan to properly accommodate them, then that's going to cause housing supply strain, right? At the same time, these same people require employment. And as you can see on this graph, the divergence between the unemployment rate and the population growth is now a spread of nearly 2% there. And it means that, again, like we did not have a plan to house the increased number of people in the country, we also didn't have a plan to stimulate the economy to the point that these people could be absorbed into the workforce, right? So now we've got not only a housing issue, but an employment issue, where these people now don't have jobs and don't have housing, right? And that's causing strain. And you don't need to search very long and hard on social media or standard media to see how this type of poor planning for increased population is impacting people personally on a housing level and on an employment level.
Yeah, and that employment level, like, I wish I knew that historical number off the top of my
around five ish is around where we normally are. Not everybody's always going to be employed, guys, but yeah, when we get up above 6+, it gets a little bit concerning. And on top of that, we are 1 percentage point higher. I believe it's 1 percentage point higher than we were this time last year, meaning the unemployment rate has increased by 1 full percent in the last 12 months.
Yeah, and you can see our population growth here a year ago, as your example, is kind of just right on par, right? And with the unemployment, there is definitely what's going to happen, I don't know, but there certainly needs to be a little retraction, I might say, on the amount of people that we are allowing into the country, because our jobs just aren't keeping up with the amount of immigration that's coming in. That has to work hand in hand. That has to work together. Otherwise, you get some incredible imbalance, and that's where we start to see things like inflation and everything start to really rise on that.
Well, okay. Yeah, you and I have discussed the reduction in student visa issuance over the next couple of years, which is going to drop that segment of population growth dramatically. There are some people actually already talking about how, again, the pendulum may swing too far in the opposite direction and might impact us in a different way in 3 years from now. But I think right now, any sort of sense of easing this is the approach to take.
Yeah, exactly. Let's go to the next screen, which we've kind of already touched on this, Dion. Sorry, this is the wrong one, but we skipped. Let's go to here. There we go.
Okay, this one.
Yeah. And again, that's the unemployment rate right now as it sits for June 2024 at 6.4%, which you can somewhat see in the previous screen there. But as we just said, things need to change, and how that happens, I don't know, Dion.
Yeah, well, think about it, guys. We've got all these extra people in the country who need employment, and we're in an environment where interest rates are still dramatically high. Obviously, when you and I talk about interest rates, we talk about how it impacts housing, but it also impacts businesses and the fact that they can't take on those lines of credit to grow their business because the lines of credit are at higher interest rates, and also the fact that the Canadian consumer, just feels like they got a budget and scrimp and save, and they're not spending money like they once did. All of the things I just talked about was actually by design by the Bank of Canada, right? And so now we're entering a period of time where we need to come out of the U-turn, so to speak, and figure out how can we get through this more safely. And yeah, again, the pendulum swung a little bit too far again here, Gary.
Okay, let's talk about, you just saw it here, the Canada 5-year government bond. Okay, give us a little background or history lesson if you're just tuning in for the first time of why this is an important metric to follow, and then we'll talk about what's happening, the repercussions of this in a sense.
Okay, perfect. So everybody knows about the Bank of Canada impacting interest rates, but not many people are clear that the Bank of Canada's overnight rate impacts variable rates directly. Okay, what you're seeing on screen here is what impacts fixed rates, right? And the fixed rates are impacted by the 5-year government bond yield, which is really a projection of what they believe the future of the economy to be like. The lower the number here, the more positive they believe for the future of the Canadian economy. And what I'll point out is we're now at around 3.3. Just a couple of months ago, we were at 3.9. So we've dropped 0.6%, okay, which means that this should translate into rate drops in and amongst major lenders. The thing is, anybody watching this today knows that we haven't seen fixed rates drop by 0.6%, right? By more than 0.5%. We've seen some minor movement. And the reason behind that is, even though, as Gary and I just discussed, we've got issues with population growth, unemployment growing as well. Even though we've got these sort of negative pressures, even though those economic indicators are negative, right, meaning that we should be dropping these bond yields, and they expect that interest rates to drop and the future of the economy to be a little bit better. On the flip side, they're a little bit concerned about government spending. So while we do see unemployment growing, which should mean a drop in fixed rates, right? Especially as we've seen the drop in variable rate, and as well as we've seen this movement in the bond yield. Even though we've seen this, we still haven't seen that major drop in fixed rates at the retail borrowing level for mortgage borrowers. So the hope is that this next interest rate announcement, which is going to happen in the next 9 days or so, is going to result in yet one more variable rate drop. Okay, how will that trickle down to sentiment in the economy about the positivity of the future? Well, this indicator here hopefully will probably continue to go down, which is a good thing. How will that translate to the retail level? We're yet to see.
We want it to come down. Well, we'll see, and most likely it will. And as you also pointed out, that we have a rate announcement coming up next week. Another one, and another. Do we have? Is it 4 more before the end of the year, Dion?
That sounds about right, Gary.
Yeah,
we
putting you on the
only
spot.
we only have about 10 per year, right?
Yeah,
And
yeah.
I feel like we probably have another 5 in front of us. Yeah.
Yeah, good stuff. Should we do a little rate prediction? Here we go. Rate prediction. Is it okay? We've only got 3 options, and one is totally off the table, and the 3 options are it's going to go up, so we can eliminate that right for next week. The other one is it stays the same, and then what everyone's really hoping for, it goes down. What's your gut telling you? This is
So-
like, forget the books, forget the what's your gut telling you?
So the thing is, every day new economic data points come out that change things. And I'll just say this week, the inflation data comes out. So the Bank of Canada is going to make their decision this week based on that inflation read. In terms of what I'm seeing, the positives, the negatives, which direction should we be going and could be going. If I had to bet, I'd be betting on a quarter point drop in July. So that's, in this month, we're probably going to get another quarter point. I don't think the Bank of Canada is concerned about how it might send the property market into explosion zone, right? Because they've seen that a quarter point hasn't really had people flood back into the market. And as I said, those other points of the economy really could do with another rate drop.
Well, and you raise a good point. A quarter point. In fact, we saw an influx of listings, and the buyers just, we're sitting in some areas. We've gone from, say, 1 month's worth of inventory to 3, 4, and in some cases, 5 months worth of inventory or more, depending on your price point. So I am in full agreeance of you. Is I believe we're going to see another quarter drop. That's not going to swing the market or that pendulum from one extreme to the other. I just don't see it, and we might even see another one come August or September, and probably a couple more by the end of the year.
Like the economists who study this stuff way more deeply than you and I, Gary, are still predicting a full 2% by the end of next year, which means that yes, a couple more this year would likely need to be on the cards.
Yeah. Yeah. And to your point, the stairs versus the elevator, I think we're just going to keep seeing those quarter percents. We won't see 0.5 or even 1% drop. That'll be, I think that'll be outside of the norm of what they want to create. And I just don't see it. So keep looking for those quarter percent drops is kind of where I'm seeing it as. There's probably
the only thing. Sorry, the only thing that would change that is if some dramatically negative information came out regarding unemployment, like a significant spike in unemployment, where when they weigh it all up, they say, you know what, this is going to hurt us more than more activity in the real estate market. So let's drop it by a half point. I wouldn't take it off the table, but I agree, it's unlikely.
Yeah, yeah, and we've got some interesting times. Obviously, we down south of the border. Let alone what just happened, obviously with President Trump. The election is going to have some impact on, well, not some, will have a huge impact on the U.S. economy, and of course, how the U.S. economy goes, so does the Canadian economy, and that election's in November, so that'll have some driving impact of what happens here in Canada, whether we like it or not. We are so closely connected to the U.S. economy, right?
Correct. And in election years, it's even though technically the politicians shouldn't have control over the Fed, it's very rare that in an election year interest rates increase.
Yeah, good stuff. All right, my man. So remind us how to get a hold of you, the Dion Beg. Talk to us and remind us how to get a hold of you.
Dion Beg on Instagram or directly on our company website, Kanga Mortgage.
There you have it, my friends. That's the Dion Beg. I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.